The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 9th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what it is they're communicating to you and I at just past 1 o'clock in the afternoon on this terrific Tuesday. Of course, I want you to know that I'm grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial in 877-927-6648. Of course, internationally, you can call us at 727-445-1044. Hey, question is this going to be Turnaround Tuesday or is this just Terrific Tuesday? I don't know the answer to that, but we'll go check into it. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading up 107 points, trading at 15,919. S&P down 13 at 1840. NASDAQ composite off 42 points at 4242. Russell is down 8 points at 960. The DAX closed down about 100 points. The FTSE closed off 57. Gold is flat out here at 11.98. Silver's up 3 pennies, trading at 15.46. Light sweet crude back $1.35, $28.36 out there. We'll have to check it out, see if there's any patterns, try to figure out where light sweet Texas tea might be headed to. Leading the charge here to the upside, individual stock-wise, you've got Martin Marietta. That's up about 11%, up $12. Priceline is up $9 today. Belden Inc., that's up 20%, up $7. Public Storage, that's up 2%, up $4. Sherwin-Williams is painting the town green today. That happens to be at $4.50. That's nearly 2%. To the downside, you've got Regeneron Pharmaceuticals off 6%. That's $23. Transdigem Group down 21 buckaroonies, nearly 10%. To the downside, Amazon is off $9. American Science and Energy down $10. Google's off $8. So we've got plenty to look at to the upside and to the downside. But the first question that rose for the show was inside the Tiger's Den, and it was really a question about the NDX 100. I think I might have posed the question: Is anybody calling this going to be a turnaround Tuesday? And I think that the question somebody put out there something about the NASDAQ. So let's go take a look at the NASDAQ right now. Let's look at the NDX 100. Because it does have some very interesting patterns that you and I want to be paying attention to. So we've got the NDX. It's trading right now, looks like at about 39.22. Not traded down to the lows of yesterday. But what is interesting about this chart out here is if we take a look at the high that was formed, we've really got several patterns out here to focus on. First, the trading session out here on December the 2nd. And that's when we have the actual high inside the NDX 100. That's 47.3974. Price was actually moving higher, doing it with less relative strength out there. We know that whenever those patterns form, our sphincter muscles need to tighten. Now, only if you were maybe long, because this would be saying, hey, maybe not so fast out here. Great signals. In fact, on that trading session of December 2nd, you had a nice little dark cloud cover, some additional follow through to the downside. And the market really kind of chopped sideways for a period of a couple of weeks out here. But take a look at, and price got back in essence to its previous swing point highs from back in November and December before it finally just caved in back on December 29th. And really the 30th was the actual signal was December 31st. And didn't pick up on it, but there was a gap out here. This is the island top reversal inside of the NDX 100, up at its, in essence, near its all-time highs out here. No, can't say near its all-time highs. I don't think it never got up to the 2000 highs, did it? Missed it by a few bucks out here. But look, let's just stay on track here. And the track is this. There's also another pattern that it made to the upside. That pattern inside the Index 100 was what? Our seventh inning stretch, our seventh wave to the upside. Now let's take a look at what's the pattern that is unfolding to the downside. Well, we've got a price relative strength divergent pattern. That means that price has actually been moving lower, doing it with less relative weakness out there. So sphincter muscles ought to tighten up. Those that are short the market at this moment need to absolutely be aware of this pattern. Because these patterns are nothing more than rubber bands. The market's nothing more than a rubber band slingshotting in both directions. So we know we have a similar pattern to what formed the high that is present at the bottom. Now, this pattern can go away if price just simply continues to move lower with additional strength to the downside. That's not what's in play at the moment. That could change by 115, by 130. But right now, we just have to read the charts and see the patterns that are in there right now. Now, if we come from that high out here on December 2nd, we can see that yesterday that what the NDX 100 did was got to that seventh inning stretch, that seventh wave pattern to the downside. The exact same pattern that was formed to the upside is now what is being formed as the NDX 100 is pulling into this August 24th swing point level. Even if we see a lower low today, the seventh inning stretch just continues to move over. Right? You don't get a confirmation until we don't make a lower low. So even if the market moves lower today, this pattern is still in play. The question is going to be, is price still moving lower with less relative weakness out here? I don't know the answer, but the NDX 100 certainly has been a big culprit and moving the markets to the downside. But it's very important. I believe it's very. Now, we also have these A to B equals CD patterns out here, right? If we take a look at the NDX and we go from that swing point high from December 2nd, the A to B equals CD pattern that's logical to me looks like this. You had a 1 to 3.14, 1 to pi expansion. The pi expansion being the C to D leg out here. And that's a very stretched market as well. No bullish reversal signal. So we don't have that today. We don't have that yet. I actually don't see how we would get that today at all. So maybe it's not until tomorrow at the earliest when there could be. And I say could be out here. Again, same pattern at the index at the highs. We've got the same pattern now that is at the lows out here. If we switch over and take a look at the futures markets, give me a moment here. Let's go see what patterns are out there. Let's go see what's inside the NQ on its daily chart out here. Let's pull that over. We're going to basically see the same pattern, right? Now, inside the NQ, we can see that the futures market has been able to get down and test the bottom of that August 24th level. I'm going to go with the futures contract versus what's inside the NDX with regard to patterns and everything else, because the NQ could actually give us a bullish reversal signal today. Not saying that it will, but it most certainly could by just simply closing up at above, equal to, or above yesterday's open, which inside the NQ, this would be one heck of a turnaround. But, as we saw yesterday in the last hour of trading, last half hour of trading, a nice 30, 40, 30 some odd point move in the ES mini out here. If we take a look at the NQ, it would need to get above 41, 46.50 today. But it also has that same seventh wave and price moving lower with less weakness out here. It says we need to pay attention. Dow's off 137. S&P is down 17. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Can you imagine being on that cruise ship Anthem of the Seas, I believe, was the largest cruise ship. Can you imagine seeing 30-foot waves hit the side of that? Now, I've only been on one cruise in my life, and that's plenty for me. But I can tell you, just from anybody that goes on the sea, would you typically think you would take a look at the weather forecast ahead of time? And I know all the blame is on the cruise line and maybe the captain, and as well it should be, because they clearly knew what was going on out there. But the reality is, I would never board a boat like that in the ship. No, that's not really a boat, is it? I would never board a ship like that without understanding what the weather forecast was like. But and clearly from some of the stuff that I saw, they were already forecasting 30-foot waves out there. So, hey, the good news is everybody is safe, right? I don't know if there's any injuries or not, but mental injuries for sure. But speaking of that ship, let's take a look at Carnival Cruise Line. Let's see what the shareholders inside this equity are doing. Let's turn off our market profile, since really price is below the daily and the weekly out here. And let's see what we have going on. Now, you've seen this thing here. It opened this morning. It gapped down. It has since traded higher. In fact, you've got really a key reversal day out here inside of Carnival Cruise Line. Looks to me to be relatively extended. So you've got a key reversal day, and where's price coming back to? It looks like it's coming back to this high volume bar out here from the trading day back in September in 2013. There was volume on that trading session of 14 million shares. Prices come back to that, and it is still held. So if we take a look at retracements, let's see what kind of retracement. Even though it's a key reversal day, I'm not seeing any pattern out here. It made a 0.618 retracement. In other words, I guess there's an A to B equals CD to the downside. Let's go take a look at this out here inside of Carnival Cruise Line. So instead of trading the news, let's go trade the pattern, right? Your A point out here is December 30th high. Your B point is down here on January 20th, and your C Oh, come on, work. There we go. Your C point is out here on January 27th. So this thing here made a 1-to-1 A to B equals CD. You've got a bullish reversal signal. You've got a bullish engulfing candle. So it'll be interesting to continue to pay it. So you've got a buy signal. You've got actually a Gartley buy pattern inside of Carnival Cruise Lines, as long as the candle, continues to trade like it does today. Now, where is it that price is going to stumble? If in fact this is a Gartley, well, it is a Gartley buy pattern, so there's no question about that. It's absolutely a Gartley buy pattern. Now, we know that all Gartley buy and sell patterns have 5 different outcomes. One of those, the first outcome is nothing more than the dead cat bounce, which would say that this equity, let me go ahead and get rid of the larger A to B equals CD out here so we can clean that up. There we go. So it is likely that what we're to see here inside of Carnival Cruise Lines is at least a first move up to $46.35. Let's go turn those profiles back on right now. So just above, there's a daily box that is just above that 0.382 retracement. So very likely we're to see Carnival Cruise Lines move somewhere in the vicinity of 46.35 and 47.24. And if you get above 47.24, then that says that the price will make a 0.68 retracement, get back out to the 49.95 level, and that's the pattern inside of Carnival Cruise. Very interesting out there. So thanks for asking me to go take a look at it. Let's take a look at some additional individual stocks out here. We really haven't spent much time over the past several days. Of course, it's only Tuesday, but we really haven't spent much time taking a look at individual stocks to see what they're doing. So let's get a feel by taking a look at things that are moving to the upside today. Let's take a look at Martin Marietta. MLM is the ticker symbol. Hey, how about that? You talk about key reversal sessions out here. That must be the soup du jour that they are serving in the cafeteria at the home office of TFNN, because this is our second chart that we're looking at, and we've got a huge key reversal session. Were they out with numbers here? Let me see. What's the deal? Yeah, they were out with numbers. Earnings per share of $1.26 versus 94 cents. Looks like their sales were down a bit, 3.5 versus 3.7. Man, I can't really see that. But earnings are out, and boy, take a look at the reversal session inside of this equity. So let's try to figure out what pattern maybe this thing has completed. Let's do the same thing. Let's start with a fresh chart out here. Let's turn off our profiles, and we can see that what Martin Marietta did here over the past couple of days, it came back into a breakout area. Let's go check out the volume matrix. Now, that breakout was this gap away on the trading session of February the 10th. And, so it's closed that gap. Volume there, 3.9 million shares. And in the pullback in that gap, light volume all the way across the board, So it was moving back into a breakout area with light volume, right? You like to buy breakouts. Well, guess what? Somebody was out here buying the breakout inside of Martin Marietta. Now, when we take a look at that gap, it's our friends. You typically want to move back a little bit further, possibly down to a swing point, possibly down to just where you see the lightest volume session out here, to really understand where the breakaway maybe began. That looks like about the 23rd. And if we just simply, that's interesting, if we just simply put, see the light, well, no, that was January 23rd. I don't think that's a holiday. And if we just simply put our crosshair out there, you'll see that in essence is where price stopped inside of Martin Marietta. So you've got an A to B equals CD to the downside too, right? Just like it's almost as if we're looking at Carnival Cruise. Let's go take a look at the A to B equals CD down pattern. The 8 point on this is September 17th. Your B point looks like either November 3rd or November 4th. Let's see. Let's grab the right one. 143.30. 138.36, so it's going to be 138.36. There's your B point, and your C point right up here looks like around November 23rd. Makes a 1 to 1.272. A to B equals CD. You got a big old bullish engulfing. You've got a big, huge key reversal session. So where is it that Martin Marietta is likely headed to? Well, we're just going to go ahead and do the same. I grabbed the wrong pattern. Let's grab the right tool out here. Let's grab our retracement ruler. And you can see that in one session, Martin Marietta has done a lot of work out here. It's almost made it to the 0.382 retracement. The exact price is 135.19. The inter-session high thus far is 133.58. Really close. That's a wide-ranging bar coming into the very first level of the Gartley buy pattern, and that says that this is going to head up to 151.79. We turn our market profiles back on. It's above the daily and the weekly. Looks like there was a brand new weekly that came out this week. So it's really up above all kinds of resistance. I would anticipate. Now, if the market does form a bottom, it's going to be much easier for Martin Marietta to head up to that 151.79 level. If the market doesn't and it's continuing to croak to the downside, and we cannot rule that out, even though the index and several other indices has gone ahead and made some really nice buy patterns out here, what you and I cannot rule out is this pattern. And I don't know which one is going to where is it? Where is it? It's this pattern right here. Because right now the market is tracking on this. We've looked at this from time to time. This happens to be tearing apart the, we've got an election year, you know that. And my data, the data that I use to really understand the patterns inside the Dow, I'm going to have to wait till we get back from the break. You're just going to have to wait to hear what that is. But we're going to go take a look at the election year cycle, probably unlike anybody else looks at it. But that's a good thing. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 100, S&P down 12. Before we went to that break, we were beginning to take a look at this slide here, which takes a look at the last 21 election cycles. I only have 84 years worth of data, so that's really all that I can take a look at. And we just simply are breaking this election cycle into those years where price right out of the gate, which we have seen this year in the market, starts to move south, versus the other 14 cycles. See, people will, and actually this chart here looks very similar to second-term presidents, which is where we're at as well. So it's not a substantial difference between the price patterns, and you've got way less than 21 election years. Was it the 21st Amendment where we went ahead and said, hey, no more than 2 terms out there? I think it was the 21st, but I could be wrong on that. In that case, I think we only have, I can't remember the exact number, 7, 8, 9 that of years worth of data to take a look at. So I'll go with this one. 21 is a small sample size as well. But the brown line here, you can see where the market begins to move lower right out of the gate. The retracement that we had coming into this last Tuesday, I believe it was, is right here. And the date on that, by the way, the exact date, I got to go over to my other chart here, was February 3rd. So now this shows us moving all the way down into the lows out here, which happens to be, so if we stick really with the dates, that's March the 9th. How prophetic, not pathetic, how prophetic is it that it is March the 9th when we take a look at this election year cycle here, where things start moving down right out of the gate. So, that's the pattern that we have to say is in play. And if we start seeing some of these other patterns out here that should form bottoms, I would have to say that that would be a signal that the analog that we just took a look at is really the pattern that the market is following thus far. Had a request to go take a look at Exxon Mobil. The question is, where can it be bought? Let's take a look at maybe where it can be bought and where it's headed to. Let's, again, clean up the chart just a tad. Makes it a little bit easier. So we're going to start with our so-called clean canvas out here. I'm going to switch over, as I do every time we take a look at this, because it's always good to, how do you know where you're going to unless you know where you're coming from? So let's take a look at Exxon Mobil. This is a quarterly chart out here. And the beautiful thing is the trend line inside of Exxon Mobil. So this takes us back to 2002, July 1st of 2000. Well, of course, it's a quarterly chart out here, so it takes us back to the July 1st, with whatever the first trading day in July was out here. Takes it in back in 2002. You can see that Exxon Mobil has held this trend line beautifully. Now, does it mean that it's always going to hold this trend line? No, I don't know. But you can also see that taking a look at a trend line from the top, that's the yellow pattern out here. That's going to be your resistance area. And I'm really looking at the top out there. So that's what the green line is going to be when we take a look at the daily chart out here. So we know that price on a quarterly, on a monthly basis held. That doesn't mean that price has not traded below that level. Remember, it's the time frame, that you want to keep in mind out here. So I would say that the top of this session out here takes us back into July of 2014. That's the yellow diagonal line. So in addition to trying to find an entry point, I think you also have to do the reward risk on this trade, because more likely than not, doesn't mean that it will happen, but more likely than not, what ExxonMobil is going to do, it's going to find some fairly decent resistance. And I don't know why these work. I just know that they work and that we've got to pay attention to them. And of course, when you see a breakaway out of here, you also want to pay attention to that. But at this stage of the game, I think we have to assume, you don't have to assume anything, I'm going to assume that the top of this trend line, channel line, is where we're going to find resistance. That says in the $80-ish area, probably 83, 82.50. It just depends on which day it is that price probably hits that level. You're at $79 right now. If you're going to ask me where is the best place to enter this trade, we really gave it away, right, when we took a look at the quarterly. I would say on a retracement, if, in fact, ExxonMobil can pull back to that green line, can it pull back to that trend line? That would be a nice entry into ExxonMobil. If we take a look at our TAS profiles out here, we've got a brand new profile that has popped up today. Now, that's a beautiful thing because the bottom of this box is slightly above the bottom of the previous box. The top of this box is above the previous high out here. So it's very bullish. So ExxonMobil, with regard to being able to jump through some hoops and whistles out here, I don't know how you jump through a whistle, but I do know how you jump through a hoop. If ExxonMobil can close above its brand new market profile high, which is 80.96, then we ought to see that move into that 80, 250, 83-ish type area. area, the top of that trend line. Does it make sense to buy here? It is likely not worth the reward. Likely not worth the reward out here. So that's my take on Exxon Mobil. What you could anticipate is that 83 area, what we would see is more likely than not a spike high into 84.29, which is the top of the daily box out here. Exxon Mobil right now really just trading into that point of control, into that level here where price is most comfortable on a weekly basis. So so I will say that your buy is now not at the bottom of that trend line. But if ExxonMobil could pull back to, we'll call it 76.02 to 75.20, and it's pulling back with light volume, then it would absolutely be worth taking a trade. So I hope that helps. Danny, I think it is, or whoever it is inside the Tigers Den that requested a look at Exxon Mobil. Ticker symbol there, XOM. Now I see some chatter about oil, and heck, I wanted to see what the heck is oil doing. Down $28 out there. So it is Terrific Tuesday. That means our man Andy Heck is going to chime in on this during his show from 5 to 6, and even I'm sure during a segment or so with Tom out here. But if we take a look at light sweet crude, trading at $28 out here. By the way, the profile that you're looking at on my screen right now is really our volume profile out here. So you've got your price profiles. Those are the TAS profiles that we're looking at. Then I have since added to the repertoire for us to take a look at volume profiles to understand where there's either significant support or resistance out here. Right now, in taking a look at this profile, there is no support. Price is pulling back into the January 20th low. That low right now is 29.35. No. Is that right? 27.56. I just have to, let me put my glasses on. That might make it a little bit easier. No, actually, my glasses are for seeing far away, and I can see just fine here. I just had the cursor in the wrong spot. So 27.56 is the number. Just out of curiosity, let's go take a look at USO and see what kind of movement volume-wise is out here. So just going to take a look at that swing point from the 20th, which had 83 million shares. So in this case here, only 32 million shares. So price is pulling back when I take a look at the ETF structure behind this with light volume. So if you go back to light sweet crude, it's very possible that that low will hold out here. If I take a look at let me see here if I can put up, there we go, the daily profiles. Well, you've got, it's below all time profiles out here, so that's not necessarily good. What does that mean? That means if we do see it close below 27.56 out here, that's another A to B equals CD to the downside. And the small one out here says price projection of, probably none of us are going to believe this, 22.85 to 19.59. I'm going with 19.59. I like that number. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 118, S&P's off 15 points out here. Let's go take a look at the currency market. Now, earlier in the day, the Euro-Japanese yen really, well, it's had quite a movement, both to the downside and to the upside. And earlier in the day, it looked like what we were going to see was a hammer candle that was going to form. Give me a moment here to clean up the chart just a tad. Sorry about that. Oh, so we know yesterday we were taking a look at, the Euro-Japanese yen. Was it just simply going to get down and test the 0.618 retracement level, which it did. It did that overnight. We were concerned yesterday at about this point in time in that as price was moving down, we were looking at a wide-ranging bar. Well, we did not get a wide-ranging bar to the downside yesterday. Once we got off the air and into the afternoon, we saw the Euro-Japanese yen go ahead and recoup its gains. Now, the reason that we want to pay attention to this is because oftentimes the direction of this currency pair tells us a lot about the market. So if we were going to get a hammer candle, which there's no way to get I can't say, there's a way, but it's not too likely. So it doesn't look, well, there's a way to get a bullish reversal signal today. Wouldn't be a hammer candle, but it would be a close above yesterday's open, which, by the way, is 130.40 out here. But nonetheless, at this stage, it's very possible at this stage of the game that the Euro-Japanese yen is setting up just set up the C point of an A to B equals CD to the upside. Of course, just like we took a look at ExxonMobil, in the case of the Euro-Japanese yen, it's got some real stiff resistance at its descending trend line out here. So if it can take that out, that's very bullish. If it does that, that would be bullish for the market as well. So nothing bearish when I take a look at the best currency pair that tracks the U.S. stock market. If we go take a look at the euro versus the U.S. dollar out here, get a feel for what it is doing, we can see that this has probably some resistance right here. You know, in the case of currencies, we don't get it. We don't get it. That's just terrible. But what we're unable to obtain is any kind of volume information, any volume metrics for the currency pairs. That's why Japanese candlestick charting is so important, because the candlesticks provide you and I with a lot of information. If we're taking a look at where the euro broke down, let me just get rid of the retracement levels out here. So we just start with a total blank chart, right? This is where candlesticks provide us with a ton of information. And we start to take a look at where did the euro really break down with conviction. Hopefully, what you would do is you would say right here, Steve-O, right where you have that wide-ranging bar to the downside. There's another wide-ranging bar back here, and so the answer, for those of you that selected that one, you're absolutely correct as well. So you've got two places where the euro has recently broken to the downside. The reason why I went for the October 22nd candles is simply because that's where price is trading into. So very key level that the euro is trading into at this stage of the game. Looks like quite frankly, looks like it has completed an A to B equals CD. Well, when I say completing, I don't actually mean completed. It has not completed one yet. Looks like it is underway. If we take a look at that pattern, just to get an idea of a feel for price projections out here, there's your A to B equals CD pattern. So it has completed the 1-to-1 on its way up into the 1.272 level, and that's going to be somewhere around $1.14. And at this stage of the game, says it's really in between a rock and a hard place, because it's got this resistance at 113.51. If it can get through that, it would look like to me that more likely than not, what we would see is we would actually see the euro get back probably to that first breakdown area into the 115 range out there. So that's what's going on inside of the euro. And there we don't need any volume in order to understand or anticipate where the roadblocks are for this currency pair. If we put this, I haven't done this for a while. If we put this on a weekly chart out here, we happen to be in that time of the year where more often than not, the euro makes a significant top or bottom. And it typically does that towards the end of the year. Sometime between December and February is when we typically see, and I can't tell you why this works. I just know that it does the majority of the time out here, where it makes at least a significant move. Back here in November of 2009, this November 30th, fits right into that schedule. So there's your 2009, made a nice top out here. In 2010, February 2000, well, it was really, we had a bit of a small little consolidation in the early part of February, before the market went ahead and continued its move lower out here. In 2011, let's just go see where in 2011 do we get to. 2011, okay. Here in 2011, it was in January. Right in January 2011 is where the euro went ahead and made a fairly significant bottom. Remember, we're looking at weekly candles out here, so it's an odd thing that because I can't tell you why. I just know that it does. And if we just take a look at the euro right now, you've got in 2015, between November and where we're at here in January, this is suggesting, if that same pattern works, and it doesn't work always, but when you go back and you take a look at it, it works like a huge, can I say huge, percentage of the time. I used to have a chart. It was on a different charting system that tracked them all. My recollection is it's like in the 75 to 80 percentile out there that the euro forms some type of significant bottom or top between the late November, December, January, February timeframe. It's right in there. Now, you might say, hey, that's what I'm just go back and take a look at it. At this stage here, the interesting pattern is it says that the euro, if that's true, if Stevie's pattern that I identified as true out there, then this says that the euro wants to move higher for a while. Now, where would the euro move higher to? Well, it's really pretty simple. We've got a couple of different patterns that we could take a look at. The first is just simply a natural retracement level. So for the euro to move up to $1.18, and you're at $1.12 right now, that would be a pretty healthy move. That does also says that there's no reason that it can't move beyond that. It could move up to the 126 area. We'll just see how this is going to play out. But that's my take on the euro and a pattern that I'm happy to share with you. What else should we look at? Let's go take a look at we haven't looked at any stocks moving to the downside. So let's take a look at the leader dollar-wise. You've got Digim Group off 14%, down $30. Were they out with numbers? Yeah, so they were out with numbers. Clearly, whatever, the market didn't appreciate their hard work. Let's go see what this thing is trading into on a daily chart. Ooh, down with huge volume. So people were happy to get out of this equity. And let's go see if anybody is happy to. And of course, if there's a seller, there's got to be a buyer. And our question is, what are the buyers looking at out here? What are the buyers looking at as far as a pattern as to why they are into Digim? And the answer is, I don't know. If I were going to be a buyer in this stock, I'd come all the way back down here, probably into this little hammerish candle down back in June at around the 162 level. I'd certainly let this thing cool off because it looks like this wants to move move lower out there, and that is TDG is the ticker symbol. When we get back from this break, if there's nothing posted in the den, we'll take a look at a couple of ETF structures. Maybe we'll look at the Qs. We should look at the Qs. Let's go take a look at the Qs because we began the day taking a look at the NDX 100. Let's go see what the Qs are doing. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 101, S&P's down 13 points. Oh, I thought I deleted that chart. Glad that I didn't. 2 questions coming in during the break. The first one, Garmin. GRMN is the ticker symbol. The question is, do I see anything in this equity? Garmin, the swing point I'm looking at is August of 2010, and that is where it's traded back to. The top of that is 31.32. There was 38 million shares that traded. Now, that has been tested on 2 different occasions. In October 2015, that was tested and rejected with light volume, 33 million versus 38, and then last month 32 million versus 38. So it's pushing into a swing point. It's tested and it's rejected it from a monthly basis on light volume. So I don't see anything there. If we take a look at the weekly time frame, the most recent weekly test was the week that began October 12th. That had 15 million shares, and a few weeks ago, this is the week that began January 18th, was only about 6 million shares. So at this stage of the game, and the question came in because the anticipation anticipation, I guess, is that this stock is going to go lower. So if it goes lower, where is this headed to? Or at least folks seem to be of the impression that this is going to go lower. So, maybe Garmin is just simply struggling. I don't know where, just as a company of all these devices and maybe licensing issues. So if it does move lower and it breaks through that area, you're looking at probably 2461 as the next move in it. Next question that came out was they were looking at the presidential election cycle chart that I put up on the screen. I'll put that up here one more time. From the current slideshow. Where's that? From the current slide. So this is a chart that we were taking a look at. And the market is following along with this analog pattern. And this analog pattern doesn't say that it's one-way move to the upside or to the downside. It does say that the high that came in last week, around February 3rd, is probably a high that's good until, if this pattern is going to maintain itself, is probably a decent high until about February the 12th. So February 12th would be the next day. That's right here. That's where my cursor is, and it's the 9th. So we just have a few more days for the market to potentially bottom. Now, we got to use this as a guideline, right? It's not necessarily going to be exact to the day out here. And the patterns, and the question was, do I see a rebound, however small it might be, before heading down? So the answer is that analog pattern says yes. It happens to say it doesn't begin till Friday. Let's not always just use this to the date. We took a look at the NDX 100, the index that has absolutely been beat up. And that's got some of our favorite reversal patterns out there. And so let's just take our emotions out of this and just take a look at the patterns. And until the patterns fail, you got to go with it. Now, there's no reversal in sight here. On a 5-hour chart or 120-minute chart, I'm hedging my bet on the 120-minute chart out there, but there's no reversal sign yet. But the daily, we've got a 100% move. We've got three of our favorite patterns. We just don't have the bullish reversal signal. We've got A to B equals C to. We got a 7th wave move. We got price relative strength divergence out here. If you take a look at the daily chart for the ES, guess what? This thing had formed a 7th wave way back on January 20th. Now all the price is doing is testing the August 24th low. Until that August 20th level gets taken out in the ES, it's given us a sign of a bottoming pattern out here. If we take a look at the Dow futures contract, the Dow is the strong link. Hasn't made wave number 7. It's hardly given any real move down. It's not really threatening the January 20th level out there. What's up with that? So, folks, and how about the Russell 2000? Russell 2000, what do you got? You got a 7th wave move yesterday to the downside. Might continue today, but it's got our price relative strength divergent pattern. It's got everything. So the market is just simply, it couldn't be any, it's Paul Revere just dressed up as Steve Rhodes, riding through the streets saying, caveat emptor, because it does look like a bottom. A tradable bottom perhaps is near. Folks, stay tuned. Our man David White is up next. Have a terrific Thursday, and I'll see you tomorrow. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.